been really a great, 2015, and even before that, several years working with Rob. It's a great opportunity to meet with startups. So I'm part of the cloud ecosystems. What does that mean? That means we work with the ecosystems out here. So we work with universities, we work with high school kids, we work with startups and ventures and incubators. IBM has a lot of programs available for startup. It's probably the best kept secret. So just a show of hand, how many people know about the programs we have? Only one. Okay, so if you, if you are a startup less than 5 years old, and you have a prototype or you have a product and you have less than $1 million of revenue, please come talk to us. We have a program, have a flyer where you can apply for free cloud hosting, as well as business and technical consultation, as well as go-to-market. So imagine a startup with 5 people doing a press release with IBM. I mean, what kind of impact that would be for a business, doing use cases, talking to a delegation coming from different geography, different country. I recently just had a startup talk to a delegation coming from China, talk about the solution they have. So there's a lot of things that we can do to help you on your journey. So please do talk to us about it. I also have a team of technical resources that can help you from a technical enablement perspective. So we do one-on-one consultation. We actually mentor at a lot of hackathons. We do workshops here, and we do meetups. So if there's anything you're thinking about that you want to do, please do check out our Bluemix platform, which is our cloud developer platform. That's been one of the fastest growing cloud adoption platforms out there. Okay. Now, on behalf of IBM, this is the Innovation Center, so this is where we host partners to come, partners like Rob, to come here and share all the different informations, both from IBM as well as from our partners. So on behalf of IBM, I want to thank you for coming and hope to see you in future events. Thanks.
Okay, as I mentioned, we have many partners that help us do what we do. A few of them are here tonight. I'm going to have them come up and say a few words. First up, we have Mark from InfoBeans. Let's hear it from Mark.
Thank you, Rob. Hello, everyone. My name is Mark Stoner with InfoBeans. We're a 600-employee custom software development company. We do web, mobile application development, business process automation. So we work with a lot of startups. We either do their MVP, new product development, kind of catch people very early. We help them get funding by having a prototype. Or we work with later stage teams where they have a core engineering team and we help you scale. We're based in India. Our headquarters here are in the East Bay, but we can help pretty much with everything. And again, we can start kind of early on, but look forward to working with you. Mark Stoner with InfoBeans.
Okay, next up we have Wallace from Metis. Let's hear it for Wallace.
Thanks, Rob. Good evening. Can I get a quick show of hands? How many of you guys are interested in owning property one day? How many of you guys own property right now? How many of you guys despise the fact you have to pay so much for a real estate agent when you sell that property?
Jeez.
My name is Wallace. I'm from Metis. I agree. I was an investor for 10 years. I didn't think my real estate agent was worth what they're paying, or what I was paying them in this market. Average home is $1 million. That's $60,000 to them. We got a bunch of like-minded individuals together, started our own company, and we're able to save 2 points on the average transaction. So what we do is do all the standard, typical real estate agent, what a real estate agent does, and we're able to save 2% on that transaction, translates to over $20,000 per transaction in the Bay Area. So if you're interested in obtaining real estate or selling real estate or know someone that is, grab the flyer, and there's additional incentive when you mention the idea to IPO on there. Thank you.
Okay, next up we have Victor from PSIO. It's the guy with the funky stuff outside, the glasses. Let's hear it for Victor.
Funky stuff. That's a nice way of describing it. So
what we have over there is basically an audio-visual simulation system that uses light, sound, and voice to naturally allow your body to relax, de-stress, and re-energize and refocus. It's called neurotherapy. So I invite you to come and try it. As a matter of fact, I've been with Rob almost 2 years now, a year and a half. I come on and off. So we have evolved tremendously since the first day we came out with the first device. Now we have 3, and we have 2 locations that we are showing the property or the benefit of this system. One at the Palace of Fine Art in San Francisco, and one at Westfield Shopping Mall, Santa Clara. So I brought 4 or 5 units here. You're welcome to try. And by the way, Santa Clara and Palace of Fine Art, we charge $10 per session. Here it's free, so take advantage of it.
Okay, so though our mission is to support entrepreneurs locally in Silicon Valley, our greater mission is to democratize entrepreneurship globally. So to that end, we have a robust YouTube channel. We've got some awesome videos there. We're adding to it every week. And tonight's event will be recorded. It'll be available next year, which is in 2 weeks, on our YouTube channel. It's youtube.com/ITIPO. And I want to mention that when it's time for audience Q&A, we're going to have a couple of mics. So please line up in front of the mic, ask interesting questions, speak into the mics, and enunciate. So that way we can have a quality audio with our videos. I want to recognize Chris, our video partner. Let's hear it from Chris, and he's got a few words to tell.
Rob's being very modest. His YouTube channel has 8 million views. No, that's what we're shooting for. My name is Chris Hennessy, and I'm an independent video producer. This is my 25th year full-time. Can I have a round of applause for that?
Wow.
The last couple of years, I've written, produced, and directed corporate films for companies like OfficeMax and eBay and Google, just to name a couple, Kaiser. Love what I do with a lot of passion. So if you're interested in any type of, whether it's a training video or a special event or a promotional video, I'll put some business cards out over there. I've also interviewed about 10,000 people on camera, and that has morphed me into a motivational speaker. And if you're interested in that, I do have a special website for my motivational speaking, including a 3-minute demo. Again, it's Chris Hennessy with Custom Video Connection. I'm very proud to be here tonight for my buddy. Give it up for Rob.
I think that guy is angling for a bonus or something. I want to mention that we have a raffle shortly after the end of the formal program. We got some awesome prizes from our sponsors, and we've contributed to the prize selection as well. So some prizes include a $100 gift card, an Idea IPO jacket, free pass to Idea IPO events for January, and $100 cash, because this event is about Fintech. So you're going to get the opportunity to win $100 cash. So win those, so make sure you stick around. So without further ado, I'm going to pass it on to Janine Swatton of Yodlee. She's our moderator. Swatton.
Like swatting flies? Yes.
Swatton, yeah. Janine Swatton of Yodlee. So let's hear it for Janine.
Thank you. And I'd also like to thank Rob for doing such a lovely job organizing the panel, organizing the event. Thank you very much. And unfortunately, I don't have any jokes. I can't even think of anything at this point. But my name is Janine Swatton. I'm Director of Developer Evangelism at Yodlee Interactive. I'm also an engineer. I've been an engineer for about 15 years. I'm truly passionate about Fintech, and especially at Yodlee, it allows me to help more Fintech companies become successful. So just a brief overview about Yodlee. We're a financial data aggregator. We provide APIs. Our aggregation API provides permission-based access to a customer's credit card, bank, investment, and loan account. We take all that transaction data, vet, normalize it, running through our categorization engine, then we return it back to you. And we also have our instant account verification API, which rather than doing micro-deposits, allows you to instantly verify an account. PayPal's our customer for account verification. And on the aggregation side, one of our many customers is Credit Karma. So we're really proud of our APIs, and we're really excited to be part of the FinTech community. We have, my evangelism team, we have done 84 events. Now, I actually feel a little bit of a slacker considering Rob has done over 1,400. But we've done 84 events here in the US, and we also have an international presence as well. So first, I just wanted to start off with a few FinTech fun facts. And I'm really hoping that for those of you who are not in the FinTech space, I highly recommend. There are just so many opportunities here, and we will learn so much from our panelists in terms of what the hot areas are and how to move forward from there. But with some fun FinTech fun facts, a few 35% of banking revenues are estimated to be at risk by 2020 because of disruption of FinTech. Back in 2013, there was over, I hope these numbers are right, over $4 billion worth of funding in FinTech. In 2014, there's now $12 billion. I've been connecting with investors, and they have huge funds focusing primarily on FinTech. And also Silicon Valley, for those of you who are interested in starting a FinTech company, Silicon Valley is certainly the place to be. Silicon Valley is the global FinTech capital, with 1/3 of FinTech deals taking place there in 2013. So, without further ado, I'd love to introduce to you my panel. F, I'm just going to call you F because I can't pronounce your name.
No problem. Sure. My name is Ephraim Lindenbaum. I'm from Advanced Ventures, and I'm a recovering entrepreneur. So I actually have sat in your seat. I started my career when I was really young, didn't know any better in Silicon Valley. My first company in high school, second company in lieu of going to university, and I grew that through the 90s, exiting in the first dot-com boom. So essentially kind of rode a similar wave to this, and encourage anybody to get off before the train stops if possible. And then in classic Silicon Valley fashion, became a venture capitalist. Advanced Ventures was founded in 1999. I'm one of the co-founders. We're currently investing out of our third fund. We invest in 3 core categories: information technology and verticals such as FinTech, that's why we're here. Health tech, we invest in mobility and IoT, and then we invest in sustainability, which for us is agriculture, food, and energy technologies. Currently, we're involved with a number of FinTech companies. We love the space, and to us, FinTech's a very broad category, and we'll get to chat more about that soon. Let me introduce you.
Thanks, Seth. So I'm Riaz Karamali, and I'm a corporate lawyer, a corporate and technology lawyer. I'm a partner with Pillsbury Law Firm, which is a large international firm with we have about 700 lawyers and 17 offices, and the firm started in San Francisco, and I'm in the Palo Alto and San Francisco offices. And I tend to work with emerging companies. I've been in Silicon Valley the last 20 plus years, and work with a lot of companies from the startup stage to the M&A and IPO stage, and do partnering transactions and technology transactions as well. And the firm has great expertise in the FinTech area. So I work with our specialists who might be like payments lawyers and regulatory attorneys to help companies in the space, and look forward to having a discussion with you all.
Thanks, Riaz. Shrikant Sharma, and delighted to be here. My background is I currently run a company called Zenix, and Zenix does risk intelligent work management for financial teams. What that means is when you think of any large financial transaction involving multiple parties, multiple players, transactions are extremely complex, very critical, and very time consuming. That is the space that we aim to first simplify and disrupt. My background, engineer, I did some, one of my first jobs actually was pouring liquid aluminum into cast irons, into casting, one of my best jobs. Went to Wall Street after my MBA days, worked with a lot of financial services companies, and then from there did my first startup, then went on to work for Interwoven, which some of you might remember in the good old days, now part of HP, ran global marketing for them. Went to OpenText and ran sales for them, then did my second startup. Now I'm here with a few of my colleagues here, and looking forward to discussing this. I mean, FinTech is a huge space, something I'm deeply passionate about, because finance, financial services, and technology in finance touches everything, and that is key.
Wow, this is great. So you're all set to launch a startup. We have API, funding, legal, and risk. You're all set to go. Very impressive. Okay, our first question for our panelists are, what do you feel as though are some of the hottest areas in fintech?
Sure. So, I mean, everybody thinks of fintech at a very basic level as a financial model and financial category. Fundamentally, fintech represents a much, much broader space. For example, insurance technology falls into the fintech bracket, real estate technology, mortgage technology. And when you look at any category out there, these categories, number one, represent the potentially the largest dollar value of just about any element other than maybe global food, agriculture, and things like that. Number two, are ripe for disruption. If anybody's bought a house, I don't want to raise any hands again, anytime recently, they signed a whole lot of documents. There was this much paper. There was like a little tree that was cut down so you could, buy a house. All of that is ripe for disruption. And when we look out at this category as an investor, we're not only looking at the very traditional kind of financial APIs, financial transaction, payment, remits, virtual currency, blah, blah, blah. We're looking at all the other elements, insurance tech, mortgage tech, real estate technology, and these all cascade. When you start to look at the dollar value there, it dwarfs pretty much any other sector out there. So this is big enough that you can just pick up an oar, start rowing, and you probably aren't going to run into anybody for a while.
Yeah, so I agree, it's a really broad sector. The thing that I'm pretty excited about these days is blockchain technology. And I think that this very early days. I mean, people aren't really making money in the space yet, or very few are, but I think there's a lot of investment in the space, and there's the idea of having a virtual ledger. It's beyond just Bitcoin, but the idea of having, basically a virtual distributed ledger to keep track of all kinds of assets, all kinds of transactions, and it ties into the whole IoT phenomenon. I think it's huge, and we're seeing a lot of really interesting startups in the space. The other thing that is never going to go away in fintech is security, and I'm sure Srikant can talk more about that, but that's sort of a huge aspect of the fintech space that I think there's going to be a lot more investment in, a lot more ways to make money in.
Thanks. So with most technology, the start comes with the consumer. Now you look at rich media, you look at social media, you look at, and the reason being is obviously big market, and ultimately everything percolates down to the user level. So technology innovation starts with that. Then it works its way up and gets in the enterprise. Financial services, and fintech in particular, is not that different. If you look at a lot of the fintech plays, they tend to be very consumer focused, and the B2C or the B2C ecosystem is very strong, and it continues to see a lot of innovation. We kind of believe that there is a tremendous opportunity in the enterprise segment for financial services. And when I say financial services, to Ephraim's point, it doesn't necessarily just mean the big banks. It means corporate finance, it means some of the smaller banks, it means the legal folks, it means a lot of the purchasing in corporate functions, so on. And there's a tremendous opportunity in disrupting traditional, old school, high friction ways of work that happens in the financial space. That's an area we're particularly focused on. But even if we look at a lot of the fintech plays within, for example, discount brokerage that happens between banks. There is a company I'm familiar with in New York that is actually enabling the transactions between the Federal Reserve for discount funds with the money center banks. There is work that's happening between the SEC and the NASD and with the Federal Open Market Committee. There is one company that actually is doing securities work where, some of you might know this, but 8 a.m. or is it 8:30? On the first Friday of every month is one of the most momentous events that happen in America every single month, and that is a labor report. Unemployment and payrolls data for the previous month. That thing literally goes like in a nuclear briefcase with chains on it to the Bureau of Labor Statistics, where they announce it. It is top secret because markets trade on it. I mean, there's trillions of dollars which trade on the back of that. There is actually now a technology and a fintech play, very cool, that does that. So I think the enterprise level interaction is a pretty significant opportunity right now.
Thank you. So out of all these hot areas in fintech, which of those areas do you feel as though has staying power, or which is just a fad in Silicon Valley?
Well, so the first thing I'd say is everybody carrying a credit card here tonight? Yeah, so a lot of areas are going to stick around in fintech. And, when you look at it, if you kind of pull back and you don't look at fintech in purely a financial capacity, you look at it in insurance, you look at it in real estate, you look at it in all the other categories. Believe it or not, auto sales is part of the fintech ecosystem, right? So all of these categories are out there. And then you kind of step back and do what we all do in Silicon Valley. We say, what do we do best here? We disrupt. We look at an old system, an old process, and we find better, faster, cheaper ways to do it. And so that kind of rolls back into the way we view investments as a whole. We sort of bracket them into two buckets, right? Which is brave new world and better, faster, cheaper. And the beauty of fintech is it encompasses both blockchain, Bitcoin, virtual currencies. That's brave new world. Those are areas that, to Riaz's point, may take a little while, but are going to have a tremendous impact. And then we have better, faster, cheaper. Is that making your credit transaction easier? Is that making your house purchase easier, your car purchase easier? And as we've gotten involved in companies in both real estate tech, financial tech, and so on, we're just seeing in each of those categories, they're just ripe for disruption. And they're so big that, just to give you one little stat, just this year so far, there have been $4 billion in M&A transactions in fintech. Okay, think about that. I mean, by global standards, that might not sound like a big number, but in an emerging category like this, that's a huge number. I mean, if you want to look at social media and things like that, it took years and years to get that kind of M&A statistic. So that's how fast this is going. And the reason for it is banks are spending 10x the amount of money investing and acquiring technology than they did in 2010. We're not talking 10x 1980, 10x 1950, 10x 2010. That was 5 years ago. So that means if you can build something cool, if you can find a niche in this space, you could grow a business, but you can also sell a business. And that makes it a very opportunistic place to play.
And before we go over to the next one, just a quick question, but what are you excited about? I mean, if, having hundreds of pitches thrown at you on a daily basis, what do you really want to invest in? Payments, peer-to-peer lending, auto?
Sure. So, so I think we look at it, in a little bit different way. We think some of the most kind of traditional models like that, payments, for example, it's pretty crowded. There's some smart people like Yodlee, et cetera, doing it. I just chatted with an entrepreneur this evening who was talking about building APIs to connect disparate financial ecosystems and wallets together. That's a really interesting company, right? Who's going to bridge all those gaps? So we like those kind of plays. We tend to not look for the unicorn shot. Our models, we prefer sort of the picks and shovels. So for us, when we look at it, we're probably less likely to do a blockchain deal and much more likely to do a real estate technology deal that's going to, guarantee to have a pretty strong outcome one way or the other. How's that?
That's great. Thank you.
So coming back to the blockchain technology, I want to give you a statistic. The Santander InnoVentures, which is a fintech investment fund, they've published a report that was published in Bloomberg that they estimated that the blockchain technology could save banks up to $20 billion annually in settlement, regulatory, and cross-border payment costs. So just sending money across the world right now it takes too long, and too many people have to touch it that are really necessary. And banks get this. So that's part of some of this money that F is talking about is being spent in the area of trying to see how they could employ technology to essentially replace a lot of their staff, a lot of their processes. And it's going to be, a lot of it I think is going to be built on the blockchain, where to the consumer, it's not going to be evident. You'll just tell Citibank you want to transfer money to your cousin in India or whatever, and it'll be transferred. But it'll be transferred in a minute, not in 3 days or whatever it takes now. So that's going to be huge, I think. The other thing that I'm interested, that I think there's a lot of potential for, is nobody has really solved the micro payment issue in a workable way. And I think that, this is fintech too, and I think that it's going to get solved relatively soon here. I mean, the technology is here, it's just that adoption hasn't happened. But, why do we have to pay this tax when we're surfing the internet and we want to go look at some content and we have to watch a video for 30 seconds? I would much rather pay 10 cents to skip that video if I could and just go straight to the content I want to watch. That we should be able to do that, and I think that that's going to be here before long.
So I think on the fintech, I'd like to kind of just do a quick, I'm going to say, I'm dating myself, a 20-year recap. Financial technology. So my view on this is anything that enables, that simplifies, and that reduces friction, increases liquidity, is always going to be successful. There'll be competition. You go back 25 years, 30 years, they had swaps. For those of you that know what swaps are, it is a way for treasury guys to hedge their foreign exchange risk. Or interest rate risk, depending which one it is. They had, for example, things like derivatives, which was a way to kind of hedge risk. You had credit default swaps where companies could manage their credit exposure. And so all these innovations that happen in technology, and these are all technology plays. Some of them are misused, some of them are not, but at the end of the day, they're all driven by a fundamental need to increase liquidity, reduce friction in the market. So now you've got simple things. I love that, and I still am waiting to get my coin. You might say the Kickstarter thing. One card which can replace all the credit cards you want. Awesome to do that. So there is, again, I don't think I'm most qualified to say which ones will predict, which ones win, which will not. But I think any key play in the consumer space that can simplify, reduce friction, increase liquidity is going to be huge. The company that just went up to the podium reducing 2 points in broker fees, that's exactly what it is. It is really increases liquidity. So those are powerful. On the enterprise space, and we'll talk more about that, but that's again the exact same feature. Our mission is adding value by making it simpler, easier, and cheaper to get things done.
Oh, before you pass that microphone on, so you mentioned the coin, the Kickstarter thing. I'm not too familiar with it, but having all your credit cards stored on one device, aren't you concerned about security? Once you have access to one, then you'll have access to all the cards.
Yeah. So Jeannie, I think there's a couple of, there's coin, there's one called Quiver that I'm familiar with as well.
Mm-hmm.
I think their proposition, and I can't speak too intelligently because I don't own one yet, but their proposition is you can actually punch in a code and then decide Amex, Visa, MasterCard, whatever, and you can scan it just like a regular card. It connects to the iPhone, so if you walk away from it, the iPhone buzz the IoT kind of standard, the interactivity with the phone. So, and I suppose it's got, again, great question. I think that's the hurdle they've always tried to cross over, but that's the best I know.
Okay, great, thank you. Okay, so on to our next question, and Srikant, I know you mentioned this, talked about enterprise before, but fintech for the enterprise versus the consumer. What do you see as the challenges and the growth and utility?
So and this is may not even in specific just for fintech. In general, for technology companies, there's a very different ecosystem for consumer and for the enterprise. So much so that very few entrepreneurs who are strong in consumer have succeeded in enterprise and vice versa. Let's start with a few. You've got selling to a JP Morgan is very different from selling to a retail, somebody looking to buy property, for example. There is that. There is the very nature of trying to sell to, there's a matrix decision making at any enterprise level. So trying to sell to, for example, again, using JP Morgan as an example, you've got to get through IT, the business decision makers, legal, go through the approval process. In many cases, even the regulatory folks, the SEC involved, there are 10 different regulatory firms and agencies overseeing financial services. So selling to enterprise becomes more complicated than in that sense. However, there are some distinct advantages. One of them is I call it a quick in, quick out on the consumer side. The cost of switching for a consumer is good. I could use coin. I don't like it. I got something new, cool, and thing called Quiver. Okay, I'll use that. we've all used, I mean, our switching costs are fairly, we're very fickle as consumers when it comes to technology. Enterprises are not so. It's much more of a slow in, slow out. Getting in is painful, but once you're in, it's a lot stickier. The switching costs are very high, and that makes it good from that standpoint. The revenue models, for example, on the both are very different as well. One is a numbers game, and oftentimes you get a lot of pricing pressure once you have competition. On the enterprise side, it's a value game. It's not a pricing. I mean, I assure you that no matter how much we charge, it's probably not too much for JP Morgan. What they care about is not how many dollars is, it's really where is the value for the company. Ultimately, I think the key growth areas for in the enterprise segment, I like it a lot more personally. I'm biased because I understand it better than I do the consumer side, and the reason being that it is in the cycle it comes much further along, and there's a lot more of the software or the technology envy in the enterprise space, and that's where that's how we see it.
Do you want to speak to that? No, I don't have that much to say about that one.
So I resonate with everything that Shrikant said. I think the interesting component here is when you look at other categories, there's historically sort of a bend in one direction or another, right? So there's some categories, social networking, right? The consumer side of that business is exponentially bigger than the enterprise side of that business. You go to other elements, and maybe it's the database software business, right? Well, that's a lot bigger on the enterprise than it is in the consumer side. When you look at fintech, those models don't apply. You've got a broad enough category here where, to Shrikant's point, you could keep selling everything you could to JP Morgan as long as they said they're not going to run out of money. On the other side, when you look at what the consumer is doing with everything from wealth management apps to how are they going to find houses to how are they going to buy cars, how are you going to close transactions, and how are you going to send money? For example, as Riaz said, what we call remits or transfers of cash. And it's all across the space. And when we see micro lending, private lending, all these categories. So, this is not a one versus other. This is both. And it's just really such a big category that, you just, again, to my earlier point, grab an oar and start rowing. And if you happen to run into someone on your journey, that's great. But if not, it's a pretty green field. So, we look at it like that. The other element is, challenges, right? All these elements have applied. But I think the overarching one is what we call the consumerization of enterprise IT on one hand, and then just, frankly, the modern consumer, right? Which is their expectation is a Twitter level of experience when they're buying a house. It's got to be super simple, or a Tinder experience when they're buying a car. And so, your job as entrepreneurs is to take all that great learning that's occurred with Facebook and Twitter and Tinder and everything else that's been out there and bring that into these older, stodgy industries like mortgage, like insurance. No one's buying insurance like they are, getting dates on Tinder. You're not flipping through and saying, this one's better for me, right, are you? Because that'd be a lot more fun, wouldn't it? So there you go.
Oh, this is sure. Great, now we have a great idea for an app in the fintech space. Thank you. Okay, we're just going to shift over a little bit. So I know we touched upon this. Will cash ever go away? And what's wrong with using cash anyway?
It's hard to imagine that cash would go away. I can't quite see that.
I see this too, yes and no. I mean, I think by the time, I'm sitting back on a porch, 85-year-old and smoking a pipe, maybe yes, but not before that. I think the problem is going to happen is, you still go to the grocery store, see, occasionally somebody pulling out a checkbook and trying to balance their checkbook while everybody else is waiting in line, and that's become almost infrequent. You almost never see it. So I think over time, the problem I think is just the demand supply. Governments and economies would love to make it cashless. Why? Because everything is easy to track. You don't have to mint money. Your tax base goes up. Let me give you an example of India. 88% or 85%, something like that, of all transactions is cash. How do you collect taxes? You got to have them report their income you really believe they actually do that? No, they don't. I mean, so your base is like a fraction of what it really could be. If you could monetize that economy and make it all digital, you're going to blow up, and you could reduce the overall tax rate and broaden the base. But that's for the very reason why people don't want to do it. I mean, it's completely off the grid, anonymous if you use cash. You got black money, you got drug marketers, you got racketeers, you got all these sorts of things going on. Cash is always going to be there. So there's always a little bit of yes and no. But I think, if you look at Europe, the percentage of cash use is, I'm going to guess, I don't know the numbers, a fraction of what the US is. And certainly a minuscule version of what the rest of Asia is. So in maybe 30 years, maybe, but short term, just one last statistic before I hand over to Ephraim, is I've heard the statistic, the 40% plus of all the US dollars minted are not in circulation in America. This country like Panama supposedly use US dollars as official exchange currency, but also, I mean, it is the official, I guess, currency of record. So if you're a guy who wants to stash stuff in a wall or a mattress, what are you going to use? Treasury bills and notes.
So I'll challenge this one in two ways. One, what is cash? Okay, today we think of that as paper money, whether that's a transactable currency like Shrikant was saying in India, but really, what is cash going to be? So when you're saying when is that going to exist, is cash going to be a form of cryptocurrency over time that becomes ubiquitous, right? And then at the same time, if you want to say, can anybody tell me what country in the world has almost completely eliminated cash? Kenya. So just to give you an idea, microcurrency, virtual currency, microtransactions, and cash are all top of mind. I mean, literally in Kenya, you could buy everything from a Coke at a roadside stand to paying for your Uber in a virtual currency. And specifically for the rationale that Shrikant was talking about, which is when they had a cash economy, the government didn't have any money. Right? And so, these issues around there are very key. Now, we talked earlier about security. Just to give you an idea, your digital health record is worth 300 times more than your credit card to a hacker online. So, and we all freely give that data away all the time, whether you know it or not. So, we hold on to the thing that maybe you've got a $200 legal limit to, and then you give away a bunch of health data online, which is worth 300 times that. So think of those kind of things, because I think it changes your perspective on, is it a bill anymore, or is this really a transacting currency?
Wow, great answer. Okay, so how does fintech play into cybersecurity concerns?
Yeah.
There we go.
Well, I think the two are inextricably, tied. That as computers get more powerful and hackers get smarter, and we rely on fintech. I mean, it's all the more important to have security, and that's one thing where things like the blockchain with the public and private key encryption, that's what they directly address. So I think the security companies and security software is going to continue to be sort of hand in hand really important.
No, I think it's absolutely. I mean, it's the single most important issue. Companies like BlackBerry built a multi-billion-dollar business because you had a phone with the BES back in those days where you could actually wipe it at the IT admin. And so, cybersecurity, and I'm going to speak from our standpoint, the number one issue that keeps up CIOs and executives is the loss of content and data loss and preventing data loss. It does, and you've seen, we've all heard about this great case of Target and Sony's recent hack and all these sorts of high-profile stuff that the PlayStation network got hacked and credit cards and passwords, stuff like that. Not can cause people jobs, can cause a drop in stock price, can cause millions and hundreds of millions of dollars in loss in share price and total valuation. That is the kind of nightmare that, as well as the CEO tells us, the executive team, guys, whatever happens, that stuff cannot happen to us. So, all these fintech companies are going to be, especially in the enterprise again, are going to put through the ringer. But even the consumer side, you've got handling credit cards, you're handling health data, you're handling all that sort of stuff. It is, single most important thing. So.
Thank you. Okay, yeah, in terms of cybersecurity though, with some of the issues that have been happening recently, I know that 60% of cybersecurity issues are a result of social engineering efforts. Do you agree with that? Or do you see a different percentage in the fintech sector?
Go ahead.
I'm just throwing that out random.
I'm not sure I understood the question, actually.
Due to social engineering efforts, which is a leading cause of, not a leading cause, but 60% of cybersecurity issues are a result of social engineering.
Yeah, I think I view cybersecurity as a global problem. I think it becomes really relevant because people resonate with their credit cards being stolen and these monetary transactions. But to my point earlier, your digital health records, your title for your home, these issues are oftentimes as or more valuable than they can pull from your bank account. So to Shrikant's point, the banks are spending billions and billions of dollars on this all the time, and there's a whole different event like this called cybersecurity that we all look to, and it's a big challenge, and I think it just rolls into the broader fintech story.
Okay, great. Thank you. Okay, we have a couple more questions.
I have just a little
there we go.
I think no matter how much security you have, there's nothing that's going to replace sort of human gullibility and human stupidity, right? There are always going to be scammers that are going to do these phishing scams and different kinds of scams, and they're going to prey on our desire to get something for nothing, basically. So that it's only human beings that can solve that. You have to be vigilant because people are going to keep coming up with ideas to scam us.
He knows, he's a lawyer.
Okay, so another question. So supposedly, I don't agree with this, but fintech doesn't have as much buzz as Internet of Things, cloud, virtual reality. What's up with that?
Well, so the first thing is cloud and IoT and things like that are actual technologies. Fintech is a vertical, right? So it's a sector of technology. So IoT applies to fintech, cloud applies to fintech, SaaS applies to fintech, they all apply to fintech. So you've got kind of a crosshatch here of technology versus verticals. And, in terms of hot, we're in a little, myopic Silicon Valley here. The rest of the world, fintech's the hottest thing since French toast. London, I don't know, if just to give you guys some interesting other data points, and follow us on Twitter at Advanced Ventures. The Fintech 50 was just announced in the last week. The Fintech 100 was just announced in the last week. Sydney or Australia just had their first major U.S. IPO called Atlassian, which is a kind of a services collaboration yet very fintech oriented company. The UK is on fire with that. Israel is cranking away. Basically the whole rest of the world is just thinking about nothing but fintech. Over here, because Comcast's running commercials on cloud for small business, we're thinking that way. So, this is a really, Kuala Lumpur just launched one of the largest accelerator programs in the world for fintech. It is booming outside of here. And the crazy part is their tool sets to work with from a technology standpoint are a fraction of what we have here. And so, they're eking it out in a really tough way. So again, if you want to, we're tweeting about this all the time. In fact, we put out a tweet every night at 11:30 p.m. California time because the rest of the world is just important for fintech. So just to let you know.
So is that you sending the tweet at 11:30 at night?
No, we got a system. Silicon Valley.
Okay.
Okay.
Do you have anything more to add?
And the question,
No, I think it's,
comparing fintech to IoT, virtual reality, cloud.
Oh, okay. I agree. It doesn't sound as sexy sometimes, but it's hot. There's lots of money being spent in it, and I think it's as important as any other sector.
Yeah, 2014 had a 3x increase in investments, from venture investments over 2013, just in the Bay Area alone. That doesn't sound like it's not hot. I think it's a huge space. To Ephraim's point, it's a super vertical. Each of these, if you start slicing it, retail banking is entirely different from investment banking, entirely different from capital markets, entirely different from mortgages. very different from insurance. I mean, you could go on, even with insurance, property and casualty, P&C is different from health, different from reinsurance. I mean, so we can get the grooves here. And it really is not academic. I mean, people who are if you're in general re, they have no idea how Aetna's health insurance business works. And that sort of thing. So each of these things there's again, billions of dollar market. So it's just absolutely gargantuan. Just like healthcare, again, a huge segment, or manufacturing, a huge segment, fintech is just like that. So.
Okay, and I agree with what you were saying before. I mean, fintech is a part of Internet of Things, virtual reality. I gave a presentation on that before, and it's just so wonderful how it perfectly fits into all these other sectors and how the banks are actually picking up on that innovation. There's one bank who's actually looking into virtual reality in order to create that experience of walking into a bank, wearing your Oculus Rift. And now that the Oculus glasses are supposedly going to be released Q1, Q2, you're going to see more fintech startups as well as financial institutions getting into that space. So I'm really excited about that. Okay, the final question. So what do you see for fintech in 2016?
Well, that's a good question. If I knew that, I'm not sure I'd be here.
You can just tell us. We won't tell you.
I think that Bitcoin is making a comeback. I mean, it's not just the blockchain tech, but the price of Bitcoin now is up above 400 again. I think that the world is in some ways more ready for it than a couple of years ago. So I think that that's going to be more evident, more prevalent, than it has been in the last year. So that's what I'm looking at.
Yeah, I agree with Riaz. I mean, who knows? It's hardly impossible to predict anything. That being said, there's a couple of things that are going to be changing. There is a very high likelihood, if not in December or in January, the Fed's going to raise rates. So you're going to have an increasing rate environment over time. Now it's not going to be probably, and it's election year, so there's going to be pressure not to kind of rock the boat too much, obviously. But that being said, you're going to see that, and it'll be interesting how that could result either in a bull run or, more likely, that's going to be what's happening. But that also means a flurry in mortgage activity and all that stuff. So. And there's also much more global integration happening across the board. So between those two, I think that's a big play. From our standpoint, we think the whole enterprise segment, it's a big white space opportunity, is going to start increasing coming to head next year, but it's a multi-year cycle.
So I think 2016 is going to be the year of insurance tech. I mean, I think all the indicators point there. We're tweeting about it like mad. Sequoia is pouring money into it, and it's sort of true north of venture. So, I think that's the case. I think, there's not only here, but globally a lot that's happening in that category. It is totally archaic. It's ripe for significant disruption. And I think it's going to give a little bit of breathing room for some of these other areas. Payments have been hot, lending has been hot. These, and they're kind of overheated, right? And I think from a venture perspective, if I see this is another payment deal, just like Uber, just like this, those are the challenges. When we're starting to see something like, people coming out of the industry as IT professionals in insurance and saying, I've been doing this for 20 years, it's been broken for 20 years, and here's the way to fix it, that's the guy you need to listen, or gal you need to listen to. So.
Okay. Thank you. Okay, so the summary, Bitcoin, insurance tech, and enterprise. Okay, so now we're going to go on to Q&A.
Yeah. Okay. Let's hear it for our panel. Ladies and gentlemen, as I mentioned, we have a robust YouTube channel, and we want to have a clean audio for this video. So if you have a question, line up here, speak into the mics.
Into that one.
Well, speak into that one. Hopefully we can hear you. There you go first.
Thanks everybody for the wonderful panel today. My question is around, Shrikant mentioned, a lot of the business in countries like India is the shadow market, right? And the question is around legalizing marijuana like we do in California. or prostitution in Thailand. And I don't mean in any negative
I'm
way.
not sure where you're going with this. It sounds
I'm
pretty weird.
I'm trying to figure
This is
out
not
if
being
in
recorded.
fintech there's a Snapchat equivalent of as we get mainstream into all the fintech virtual cryptocurrencies and everything is trackable. Is there a market for maintaining anonymity in transactions? And is there any technology or any kind of focus on those kind of things?
I mean, actually, I think true anonymity is a myth, right? Because the NSA can track everything, and you know once, and that was sort of funny that the whole idea of Bitcoin was this kind of a libertarian, anarchic concept where no one's going to track me, and that's really not true. I mean, I think it's really once you go digital, pretty much everything can be tracked. It's just who has the power and access to do that. So the most anonymous thing is cash, right? So when the more we go to digital, I mean, Big Brother's going to be watching, and there's no doubt.
I read an interesting report some time ago. One of the biggest markets in financial services is money laundering and what they call hawala, which is illegal transfer of across capital barriers between things. So the biggest tool that technology uses is actually owned by Facebook, WhatsApp. So WhatsApp is supposed to be a big deal because that's an easy way to communicate and you can delete and stuff like that. So I mean, at the end of the day, could the feds pull WhatsApp data? I suppose they could. I don't know. I mean, I think unfortunately, what's happening with even I wonder myself. It's a great question because and this is an open question back to you, and I hate to answer a question with a question, but you hit all these so-called terrorist groups having all these hundreds of billions of dollars or millions of dollars. I wonder why is it so hard to shut that down? Because it's not like they're moving suitcases of money. It's got to be all electronic, in some form or shape. So then you got to figure out there's got to be a system you can turn it off, but don't have the answer. Sorry.
So to agree with everybody here, I mean, there's just everything's trackable. I mean, unless you're wearing like a tinfoil hat and living in like Montana, you're trackable. And really, it just comes down to if you're not doing anything wrong, you just don't care, right? I mean, so my perspective is, look, if you're running your own little side business of any type you might have mentioned there, then you're on your own. But I think at this point, fintech, social media, everything, you're totally, we're trackable here. I mean, and right now, Facebook and Google are trying to figure out how to get everybody else connected, and then they'll be trackable too, so there you go.
Interesting. Good answer. Are you going to come on up to the mic?
How's it going? Can you talk about the latest funding rounds that you're seeing? And as a VC, how do you allow like founders from A to B to C cash out every single round? Because it seems like liquidity has become more and more important.
Right, so that's like a new story, these founder cash out, we don't allow that under any circumstances. I mean, no, and the whole rationale, well, the way that even started is because of the economic collapse, which collapsed the public exits for startups for a number of years. So what you had is this like 2007 to 2012 hole in the liquidity cycle for founders. So in the course of doing that, so the Facebooks and the other folks didn't lose all their talent and their interest levels at that point, the executives' interest level, they allow that cash out. Now, I think when you look at Whisper, and that's a proof point that, letting, and I could give you a lot more which aren't public, and I shouldn't because it'd probably be illegal. But the bottom line is that doesn't help startups succeed by essentially creating liquidity for the founders. My belief is there's a reason why we created stock option pools and golden handcuffs and everything else, which is, if we're going to take a bet that you're going to go all the way to the finish line, then we need to make sure that you're, effectively tagged into that same plan.
So no liquidity at all?
No liquidity. I mean, look, if you're a unicorn, and so number one. Number two is, this kind of benevolent model of we're going to give founders liquidity before we get liquidity. First thing you gotta remember is, it's not our money. I mean, we're working stiffs too. I mean, we're managing someone else's. So, how can you think of it from our LP's perspective, right? They didn't get liquidity, I didn't get liquidity, or are you getting liquidity, right? What I think the baseline that's been developed is this continual valuation increase. Last time I checked, valuation increase doesn't equal liquidity, right? So the historic model is get to the point where the valuation equals liquidity via the public market and M&A cycle, and that's the right exit.
So
Yeah.
So F is an early stage investor, and he's very disciplined. The reality of what I've seen in 2015 was this was a year where we did a ton of venture financings, and in a lot of them, founders and early investors did get some liquidity. I mean, we see a lot of secondary transactions happening right on the back of the venture funding, and it's not in a big way. It's not like people are getting their life's exit or anything. They're just taking a little bit of money off the table.
What is a little bit, like 5%, 10%?
I mean, it depends on how big the round was, how big the valuation is. In some of the bigger rounds, it might be as much as $1 million. For the founder, and if the company is valued at 600, 700 million, and you're raising 70, 80 million in the Series E round, then maybe the founder might get as much as that. I mean, we've seen that, but usually it's much less. I mean, usually, and sometimes it's very early investors. Some of these companies have been basically around for 10, 12 years, and people still haven't gotten out, and some of the very early investors want to be able to get out, and the reality of the financings in 2015 is when a company is getting funded, there are more investors circling who want to invest than actually can invest. And we've seen a lot of oversubscribed financing. So those investors who are kind of left at the altar, I mean, they're willing to buy common stock essentially at preferred prices. I don't think this is going to last. I mean, I think this was sort of a 2015 phenomenon, and we're kind of in the top of the market. I don't think it's going to be a long-term phenomenon, but that is something that we've seen this year.
And so, you talk about high end of the market, Whisper, you talked about that. And so a lot of founders that I talk to, strategy number one is to try to convince VCs and investors to liquidate them. To sell.
I mean, if I was a founder, I'd be trying to do that too. Right. I mean, it'd be great, but that's not beneficial to the ecosystem or us.
Right. Mm-hmm. Okay. Well, thanks. I'm just curious about your opinions. Yeah.
Mm-hmm. Any questions? Come up to the mic, please. Come up to the mic, please.
So, hi, can you hear me? So we are the enterprise sector where we implement a lot of business solutions, and we are seeing a demand from our clients for automating business automation, right? So AR, AP getting automated. Is that considered to be fintech?
Sure, right down the center of the fairway. I mean, that's...
Yeah, right down the center of the fairway. I mean, that is fin and tech all in one. I mean, if you think about it, when you look at ARAP, I mean, that's basically your balance sheet. Balance sheet is fintech, and I mean, that's the gut of fintech. Yeah, you're a fintech entrepreneur. Good job.
So
congratulations.
That's something that you guys can do.
Just talk to her. I mean, she's got all kinds of APIs for you.
I got her APIs.
So that's something that you guys can be interested in?
Well, I mean, I think it's going to, we have to look at it from different economics. I mean, we're looking for, explosive type growth, right? Mm-hmm. That's a great business. Intuit probably kind of has most of that category. Then about 2011, 2012, kind of in that cycle, we saw another boom. People like FreshBooks, if you're familiar with FreshBooks. And basically the kind of SaaS approach to that model, pay-as-you-go, very low-cost implementation. So I think that category has sort of moved forward. Now I think there's a new wave of that will happen, which is vertical solutions. So if you're building billing mechanisms for insurance or mortgage or, any one of these other arbitrary ones, that's a good business. That could be explosive. Is it reached the venture economics story? Not sure, but, kind of get my card and send me a deck.
So, thanks for the great session today. The question I have is with the overall cycle, we're entering a late cycle, and M&A activities are already happening in the market. how VCs are taking, because there are other sectors which are pretty hard, like technologies, we talked about cloud and other things that go back into the verticals. But are we saying the fintech is a booming vertical as a whole, or it has to be another few years from now with this late cycle maybe getting more wider, spreads are also getting widening up, you know? So is it like just a balancing game that's going on? Like, I just want to know about that.
Do you have an opinion on this?
Is it balancing, you said? I mean, look at 2013, 2014, investments quadrupled.
So, yeah, I mean,
year.
like you're right at the beginning of the
Yeah.
cycle. I mean, if we dropped you into London right now, the only thing you would hear is fintech. Everybody.
Yeah.
I mean, you go to the pub, and someone's gonna have a beer, and the guy's talking about Chelsea United, Manchester United, and fintech. I mean, there's nothing else happening in the in the rest of the world. They're not talking about mobile dating apps. They're not talking about all these other things that we've seen here kind of boom and pop. IoT as a whole is very much a Silicon Valley phenomenon. We typically are 3 to 5 years out ahead of what the rest of the world thinks. I mean, fintech is very down home. I mean, like I was saying, Kenya is ahead of us in virtual currency, right? So this is something that really hits home all around the world right now. And it's just so incredibly broad. I mean, if you look at letters of credit for shipping containers, that is ripe for disruption.
Oh, yeah.
So, this is so wide open that it's like, just pick a window and go.
So
Yeah, I mean, when you talk about the cycle, if you're looking at sort of the venture funding cycle in Silicon Valley specifically, yeah, we might be late in the sense that valuations are high, and that, if the IPO window slams shut in 2016, then everything will back up, the system will back up. VCs won't be getting their money out, and people might start slowing down in their investments, et cetera. So, and then valuations will go down, et cetera. So that's possible, but I mean, there'll always be room for good teams and good ideas, and there are a lot of problems out there that still need to be solved.
Sure.
So, I mean, I agree with that.
Thanks.
Hello.
Hi.
My name is Erez, I'm the CEO of Quisco. I would like to ask a question about the lending trend in fintech. We saw a lot of booming in the peer-to-peer lending, and now we're seeing, based on news, that they are trying to go to the business environment, maybe to disrupt the business loans. That we see the problem of the traditional banks and lenders addressing it, from small business to medium business, and how this change of market will be. I would really like to hear your opinion about this change.
I'm not sure of the question, the lending?
So the lending issue, like the lending market for businesses, and does it will come as a disruptive like the peer-to-peer, like lending climate prosper, or maybe the banks will take a hold of it because they're losing some other groups.
Yeah, I mean, so that's it's a really good question, because I mean the issue is there's a very fine line between being a software company and being a financial institution, right? And those lines are getting blurred. But at the same time, at some stage, there's a reason why we've got a major banking system. When we look at something like Lending Club or Prosper, those work in microcosms and they fill kind of a void that's out there. But, what's happened with the very low cost of capital over the last couple of years is, there's so many different kind of iterations of business lending out there that literally one of our startups gave me a stack of faxes. When was the last time anybody saw fax? This stick full of different lenders that had offered them up to $100,000 on signature only. Okay, this is a startup. Okay, I mean, they don't have any credit. I mean, they could call, and as we just heard, sadly in the San Bernardino issue that happened, they took out a $20,000 loan via a mechanism like this right before they went and did that. So, I mean, I think that there's a regulatory piece of this story that has to catch up. There's a reason why there is some banking laws out there, and, so while that's ripe for disruption, it's also ripe for regulation. And you always have to be careful, because you don't want to be the guy whose business gets regulated while you're doing it.
And I think you make a really good point about sort of software bleeding into finance. And Square Capital is a really good example. So I was reading about this in Square's S1. I wasn't really aware of what Square was doing until I saw that. But basically, because Square can track all its customers and sees their payments histories, they're now going out and offering to customers when they see they're regularly getting payments, they're saying, hey, we will offer you, $100,000 loan, a $500,000 loan based on the future payments that you're going to collect because we see you're reliably getting these payments coming in. So they're just using their data to source these loans, and then they're finding sources of capital to lend to their customers. So that's a very disruptive model, right? So I think there's lots of opportunity for that.
Good point.
Good point.
I just want to add one point to this and the previous question as well, is when you get into the sales model and you touch the real customer, I want to also just give a sense of the cocoon we live in Silicon Valley versus what goes on in the real world, right? I mean, it's like the analogy I'd use is like this fighter jet that just whizzes past and people look at the fighter jet. The impact of that, the wake turbulence and the turbulence in the air lasts for miles and years after that. So a small example, I mean, how many people still use, lending tree came out, or all these things. People still use traditional systems. It takes time for the people to change that. You've got cars.com. People still go and walk up to a dealership and buy a car. You've got all these transactions. You've got new mechanisms. And so what happens, we're so far in the, front in the spear, but the actual business percolation of that change takes much, much longer. So there is a big difference between what is a funding cycle, because from the venture capital, or from the venture world, it's like, been there, move on, it's done, because already invested, that there's a certain wave. Not to be entirely confused, although there's a track and a correlation between the actual impact of that in the big business itself. So that's my key point, yeah.
Thank you.
I wanted to follow up on, you mentioned Kenya, and I mean, 7 years ago I used my mobile phone there to pay for things. And I don't have recent numbers, but in 2010, 12% of their GDP goes through
Way higher.
Yeah, but that was 2010.
It's over 50%.
Yeah. And on top of that, I can transfer money there in a matter of minutes to somebody's mobile phone, right? From anywhere in the world, actually. Here in the US, it takes me 3 to 5 business days to transfer money between 2 banks. And I had to explain to my kids, because I come from Europe, what a check is. Because in Europe, we gave away using checks like 10 years ago. So my question to you is, where are you, or where's the venture ecosystem here in Silicon Valley looking for innovation outside? Because it's kind of hard to believe that a lot of innovation will come here, because you're still like 10 years behind everybody else.
Well, Americans are really nostalgic, so you just have to kind of like think of it that way, right? You have a toaster at home. I mean, you don't need a toaster, you have a microwave. So at the end of the day, that's one of the big parts of the
How do you make toast in a microwave? I gotta figure this one out.
I tried that 30 years ago.
So the point is that's what's beautiful about fintech. That's what's so unique about this, is it is a global sourcing opportunity by default, right? There's so many of the technologies here that have kind of grown out of the myopic aspects of Silicon Valley, and then the world, it's been forced upon the world. Sometimes it caught, sometimes it didn't. But fintech is really global, because many of these problems are just flat out global. I mean, whether it's sending money home to a home country, transferring small models, amounts of money places, I mean, that just automatically makes it. There's a reason why the fintech capitals are here: London, New York, Singapore, Hong Kong. And it's equally discussed. I mean, when you start talking about the capital of technology and the capital of databases, you don't go, right, it's here. So you have to kind of take that as the first step. Now, coming back to the Kenya story, okay, that's a case study. All right, it's a small country, there's not a lot of money moving around. It was the absolute best case study in history for this to happen. And it's been very helpful for the country. People, you know, you've risen an entire class of people to the next level. And it's incredibly meaningful on like lots of levels, and I hope one day we all get credit for that somehow. But the part about it moving here, that's where the regulatory issues. And you know, we deal, to Riaz's point and to Shrikant's point earlier, with a lot of regulatory bodies, right? And that's hard to change.
Yeah, I mean, one of the reasons that M-Pesa was so successful was because it was not regulated.
Right.
It was simply mobile credits being transferred between.
Right.
And, you know, I've worked with an organization that helped bring this, kind of technology around the world. And every place where it was regulated, the usage of it was a lot less.
It's a risk to regulation factor, right? I don't think anybody was really worried about.
I don't think anybody was worried about that roadside stand guy, you know, Kenya just, you know, doing some crazy stuff. I think it's here, you know, when you're dealing with very large quantities of capital, lots of different participants in the food chain, and highly complex economies. I mean, tomorrow they're going to move interest rates, right? I mean, how, you know, we got way bigger problems than texting you your, you know, payment. So I think you have to kind of step it there, but that's a great microcosm. And there are lots of places. I think Bangladesh is the next good choice for that. I think there's some Latin American countries that are going to be great choices. I think what's going to be interesting is what happens in Venezuela when you have kind of a vacuum, when there's a change, because we're seeing a change happen there. Or do all these fintech things come in and it take root? So there's a lot to be seen.
I just want to say one thing too. This is a question I've heard several times. I travel quite a bit, and the question keeps coming up. What is your, I mean, there's more innovation happening in China, there's more stuff happening in Europe, there's and so on and so forth. Why is this such a big deal in Silicon Valley, in America for that matter? And I've thought about it. And I think the real answer is a very, very simple one. It is the ecosystem. It is not that, there's obviously plenty of smart people globally, right? But if you look at an entrepreneur who wants to start something in Dresden, Germany, or in Bangalore, or I don't know, Manila, Philippines, it's great. Great idea, you might have great product, but the ecosystem, you've got to have the financing, you're going to have the customers that really matter. I mean, a small bank of no name in Luzon, Philippines, who cares? You get JP Morgan, job done. I mean, so there's an ecosystem there. I mean, and then of course there's a whole ecosystem. You feed into it, you get it, the acquisitions are bigger, the deal is bigger, therefore the talent comes in, and so it's a virtual cycle. And it's taken probably 50 years, 40 years, and it's not even all of America. I mean, they've tried this, replicate this in other cities in the US, not even close. I mean, it's just a fraction of what the Silicon Valley is. So, when all the immigrants and all the people come to Silicon Valley, it's for a very good reason. I think the ecosystem feeds on itself, and it's a virtual cycle and this engine which keeps feeding itself, which is phenomenal. I think that's why this is still the hub of innovation. So that's my belief, yeah.
Thank you.
Thanks.
So I'm just gonna, now that we see Amazon taking over, being the big vertical players in a lot of markets, banking, delivery, sales, what do we see? I can see where the enterprise system and serving those customers is a great area to work in. Where do we see the future of the large existing companies and their relationships with their consumers for smaller entrepreneurs? What do you see?
Go ahead.
So I think you're asking about small businesses, or are you asking about like Walmart or like Sears? I'm trying to catch you here.
Because Amazon is vertically integrating a lot of different markets, sales, delivery, banking, everything into the banking business.
Yeah. I mean, have you seen Alibaba? It makes Amazon look like junior varsity ball. I mean, those guys, you could build, a skyscraper. You could buy all the parts there, or you can get a drone on the same purchase, and you could pay with Alipay. I mean, all in one shot.
Right.
Yeah, so I mean, that's the future. I mean, you know, and then what happens is you have the artisan and you have the high volume, right? And, you know, as supposedly a advanced society, we appreciate both, right? So you appreciate the small bookstore, and then hopefully you don't go order the book on Amazon.
Anyone else?
Any more questions for our panel? Let's hear for our panel.
Bravo.
Ladies and gentlemen, stay in your seats. We're going to do our raffle.
Oh my goodness.
Thank everybody for sticking around. Some of you will be handsomely rewarded. Has everyone who wants to enter the raffle entered? If not, here's your last chance. Jenna?
Any last calls?
Last call. All right, we'll go ahead and get started. How about this? Unlimited pass to Idea IPO proprietary event January 2016. The winner is
Great job on the drums, Boo.
Okay, how about this? This is a power bank charger, and it comes in handy. The winner is
Grace Wang.
Grace. Come on down. Wallace, you have a prize?
Yeah,
so
I got
Wallace
two.
from Medicine has a prize. Here's two prizes. Go ahead. What's your prize? Tell us what your prize is.
So, me and my team all have clean canteen bottles. We really love them. I want to bring something practical for you guys that you could enjoy and keep you guys hydrated. So we brought our favorite water bottle, and I think we all need we can never have too many water bottles.
Alright, the next winner is Robert Bizek. Woo!
Awesome. First color. You got it.
Okay, one more.
The next winner is Tim Durgan.
Yeah. Do I get one of those? There we go.
So now we have some really good stuff. Here's an idea IPO jacket. Very fashionable. You want all of this? All right. That's it. The winner is
Kevin Day. Yes.
Oh, Kevin!
contributed to our sponsor, Yodely. Janine, you want to tell us about your prize?
You want to do that?
Well, why don't you?
See, as part of Yodely, not only do we provide amazing APIs, but we have great entertainment. We have Vu and the drums here, and we have Jenna presenting, so this is wonderful. Anyway, our prize will be a $100 Amazon gift card. You want to go, Joe?
And the winner
already
is...
took it.
Oh, you already did?
Sophie Alcorn.
Once. Sophie, are you in the house? Sophie.
Hey.
Snooze, you lose. So don't do it. Don't do it.
What did she want? She won a $100 gift card. We'll tell her. Gotta stick
Vishal
around.
Sharma.
Wait now.
No, that card was mine.
It's not a real card.
No,
That's not a real card. Yeah, that's not a real card. That's not a real card. It's my card. Okay, so here's the grand prize. It's $100 cash. I know that some people don't believe in cash, so if you win it and don't believe in cash, you can return it.
Or give it to Rob.
Come on down. All right, well, that's it. Well, thanks everybody for coming.